Elevate were launched in 2020 by a group of medical aid actuaries based down here in Cape Town. And being medical aid actuaries, they work a lot, obviously, within the healthcare system and obviously working with new technology and systems, right? This crowd are called Insight Actuaries, and Matan Abraham, the CEO and founder of Elevate, originally started his career there. And turns out, working with the healthcare system as Matan did, he was exposed to a lot of data. Apparently, there are huge amounts of data that exist in the healthcare system on each one of us. So if you've ever interacted with the healthcare system, there is data and records of that interaction. The problem is that data is often unstructured, and it's sitting in numerous different places or centers that don't talk to one another. So what Matan and his team set out to do was leverage that data, find out how to leverage it, and obviously use the latest technology to improve the onboarding and underwriting process for advisors and customers. Okay, so that you can go from quotes to activation in one sitting, as little as 15 to 20 minutes. And in the process, save a huge amount of money on acquiring policyholders and passing all of those savings on to the policyholder to drive down premiums. I think we can all agree that price sensitivity is at an all-time high in our industry. Generally, it boils down to price for a lot of clients. And the retirement crisis, which ICON feel very strongly about, is also at its worst. So what we believe at ICON and Elevate, also share the sentiment, is clients should be paying as little as possible for their cover. Obviously without jeopardizing on the quality, but finding new innovative ways to streamline and create more efficient systems and processes, and in doing so, pass those savings on to the end consumer. Okay. Through that same data and technology, and this is what we're going to be touching on today, they've also created a shared incentive scheme. Okay, so Elevate have called it Elevate Rewards. I prefer not to call it a rewards program just because I think that there are some negative connotations around rewards programs, which I think are, like rightfully so. So I think a shared incentive scheme really hits the nail on the head in terms of how the Elevate Rewards program works. And we'll jump into that in more detail just now, obviously. Then just to explain who's involved with Elevate. So they're not a household name. Okay. And this is naturally the first question clients ask when they're seeing Elevate for the first time. Who are they? Can I trust them? And will they pay a claim when I need them to? And those are all valid questions. Elevate preempted these when they, built and launched the company. So they partnered with the biggest and best names in the industry. So from a capital perspective, Elevate Life have partnered with Insight Actuaries. That's the medical aid consultancy that I mentioned just now. And Insight Actuaries raised the seed capital for Elevate to build a proof of concept and go to the capital markets to raise further funds to build out their distribution. Allan Gray were an early investor, so Allan Gray Ventures. And Allan Gray, don't quote me on this, I believe own about 15% equity in the business, and they are an active shareholder. Okay, so not a silent shareholder, they hold a seat on the board, and they're very much involved in the day-to-day decision-making and direction of the business. That's a big feather in Elevate's cap, being associated with a huge brand and household name like Allan Gray. And then Yellowwoods. So Yellowwoods is maybe a lesser known brand, but in the financial services industry, they're a force to be reckoned with. So a venture capital fund owned by the Enthoven family. The The Enthoven family own or started Nando's, they own Hollard, they own Spear Wine Farm down in the Western Cape. And Yellowwoods is essentially their venture capital fund that invests exclusively in financial services businesses. And yeah, hundreds of businesses invested in via that vehicle. Also hold a seat on the board and actively involved in the strategy of the business. Then from a risk perspective or insurance perspective, the people that they've partnered with there are Centric Life Insurance. So Elevate Life are a sole captive structure. What that means is they don't hold their own life license. This is typically how insurance startups enter the market, because life licenses are very expensive to acquire, very capital heavy. So you have to have lots of cash in reserve to meet the solvency requirements, and lots of red tape. So when you're wanting to go to market quickly, it's not ideal. So Centric are essentially a life license for hire, and that is a 100% subsidiary of Sanlam. So what does that mean? It means that a lot of the risk management protocols, so underwriting, compliance, claims, are signed off by Centric Life. And in turn, obviously need to meet the rigorous standards of Sanlam. And if Elevate were to ever close their doors, this also means that Centric legally have to become the custodians of those policies. Okay, they're ultimately responsible for the paying of those claims. Then from a reinsurance perspective, Hanover Re are the sole reinsurers to Elevate Life. Okay, so Hanover Re, I think they're the second or the third largest reinsurer in the world. And most of the risk is reinsured through to Hanover. Okay, so clients are very well protected. There are strong structures and mechanisms in place to ensure claims are paid, that there are strong capital requirements or measures in place, and that regardless of what happens to Elevate, both now and in the future, if a client is covered with Elevate, they will be covered for the foreseeable future. I quickly want to touch on the three pillar value proposition of Elevate Life. Okay, so I think everything good in life happens in threes. So easy to understand. First of all, which I've also touched on already, is the experience, the onboarding and underwriting process that Elevate have developed. Okay, so they've codified this process from start to finish. There's no paper, there's no wet signatures, and you essentially follow the process through your broker portal. And in most cases, you can activate cover then and there. Okay, so with underwriting, almost kind of going backwards with a lot of the more traditional insurers, Elevate have found an innovative and efficient way for this process to be improved. And they're always looking for ways to improve it. When we talk about immediate decisions, digital processes, being able to activate cover immediately, our minds often immediately go to either a cheaper, nasty product, or something that's sold through a call center, or underwriting at claim stage, or a whole lot of general exclusions enforced on the policies. Okay, so that is not the case with Elevate. The product is fully underwritten, it is comprehensive, and it stacks up against all of the big players in the market. Okay, so there's no hidden stuff, that there's no surprises later on. You will know what terms you are getting up front before you pay a premium with Elevate. And then thirdly, the rewards program. Okay, so this is a complimentary benefit included with every single policy, and we believe it provides unmatched value in the market. Okay, so Elevate premiums are incredibly competitive before we even factor rewards in, And everyone on the call who's quoted with Elevate and done business with them will attest to that. But when we take the rewards into consideration, the package that you're receiving, you're not going to find better value elsewhere. I mean, I can kind of, yeah, I can say that confidently. So that's what we're going to be chatting about in more detail today. And I think before I get into the nuts and bolts and the nitty-gritty of how the rewards work, I just want to take a step back and kind of run through the concept of this rewards program. And I think it's really important to kind of understand the philosophy behind it. I think, being able to understand the thought of where it originated really helps in terms of understanding the broader proposition. And Matan, the CEO, and I have, we've been working with Elevate for the last 5 years or so. So I've sat in a lot of meetings with Matan, hearing how he positions the various concepts from, how the business has been built to the products philosophy to the rewards. And it's really fascinating. He's a smart guy. And I kind of, hearing the philosophy behind it is valuable. So from an actuarial perspective, and I'm talking about product pricing now, roughly 70% of the risk premium that a client pays on their policy is based on their genetic risk. Okay, so the things that they are genetically predisposed to, their heritage, obviously their personal medical circumstances or profile, and these are things that we cannot change, right? If we've had a heart attack, we've had a heart attack. If we're predisposed to cancer and we have family history, that's kind of the circumstance we were born into, and nothing is going to change that risk. And from a pricing perspective, there's mechanisms in place to control that 70% of risk, and that's underwriting. Okay, that's why they ask for things like, have you been for genetic testing? What is your family history? And they obviously ask about your existing medical experiences and profile up until that point in time to ensure that there is no anti-selection and that pricing is fair on an individual basis. Interestingly, around 30% of your risk pricing is based on your behavior as an individual. Okay, so if you're predisposed to cancer, you're predisposed to cancer, but exercising and eating well and going for regular cancer screenings can reduce your chance of dying of cancer, can even reduce your chance of your chances of getting cancer. The obvious ones are if we're physically active, we're going to be healthier. If we are financially responsible, generally we'll have the financial means in the future to take care of ourselves if we get sick. So that 30% of your risk premium historically has been very difficult for insurers to accurately price. So what do insurers do in those circumstances? They do population pricing. Okay, so law of large numbers, if we just average it out across, 10,000 policyholders and we charge a small premium for everyone, that should cover the risk more or less. But in this day and age, we've got data, okay, real-time data in a lot of cases through things like smartwatches, and we've got technology. And going back about 10 years, this is when the concept of micro pricing kind of became a buzzword. And it started off in the short-term space. So we all have car trackers in our cars. Okay, so when your car is parked at home in the garage, why should you be paying insurance while it's parked in the garage? Okay, apart from if like a tree falls on your garage or, there's a flood or something. But when you're out on the road, that's when you should be paying the highest premium. And a lot of the short-term insurers started to introduce this concept of micro pricing. Obviously, Discovery launched Vitality, and I think that started out with the best of intentions, but it's it has kind of lost its way a bit, okay, because it's in things like Kauai smoothies and gym discounts and things like that have kind of, blurred those lines. But with Elevate, what they're saying is that 30% of your risk premium that is based on your individual behavior, if you show us that your behaviors are good and positive and you're doing the right things to live a healthy, low risk lifestyle, well, we can give you a portion or all of that 30% back to you as a rebate. Okay, so there's no cross subsidization happening. It's based on your individual behaviors and activities and habits. And there's no above the line costs. So there's no smoothie expense, there's no gym discount expense, or access to an airport lounge or discounts on your Emirates international flight. Those things are very expensive for schemes like Vitality to sustain. And as a result, it means that there needs to be some kind of cross subsidy in that pool to fund it. What does that mean? It means that people on the lower end of the spectrum are being penalized to support and fund people on the top end of the spectrum. Okay. And that, from a philosophical perspective, is not how the Elevate Rewards program works. Okay. So I just wanted to kind of preface the discussion with that. And I think it's very important to keep it in mind as we discuss the Elevate Rewards. Okay. So just a bit of a preamble, and I think this puts into context everything that I've said in a nice, neat paragraph. Okay, so living a long, healthy life should not undermine your prosperity. So Elevate recognizes and rewards and incentivizes positive behaviors and behavioral improvements. All policyholders have access to the Elevate Rewards scheme, costs them nothing. Okay, and the rewards or the premium rebate is provided to policyholders on a monthly basis. Okay, so it's immediate, it's monthly, it's not an annual cashback or a 5-yearly cashback or a cashback at retirement age. Okay, so I think that's very important as well. You're getting the reward immediately, and there's no carrot being dangled that requires you to pay premiums for an extended period of time when you don't need that cover in place, right? You can get the benefits and the reward while you are needing that policy, while you are paying premiums. You can get it immediately. And if you don't need the policy, you can cancel it and you've already got that benefit up front. Okay, so the cashback for the rewards is up to 30% of the monthly premium. Okay, and it's linked to the degree of transparency that a client offers and the continued engagement of the kind of program. And I'll get into what that means. So what does engagement means, or what does transparency mean, first of all? And what does engagement look like? Okay, so what types of things are you going to need to do? What goals are going to be set for you on an ongoing basis? So let's break down the 30% in a bit more detail. Okay, so there's a few components or requirements that add up to the 60%. And I think what's really nice is just by being transparent, Elevate will recognize that and reward you. So what does being transparent mean? Okay, so being transparent to Elevate means sharing your data. And there are 4 data points or areas of your life that Elevate are interested in. And please don't think that sharing data means, this data is going to be sold to some marketing company and farmed out and used to kind of sell to you, like a Google would do or a Facebook would do. That's not the case. Okay, so Elevate are purely using this data to understand your risk profile as an individual from an insurance perspective, relating to the Elevate product that you have. And the 4 areas that they're interested in are your medical scheme data or your personal health information, your wearable data, your credit score, and your banking and financial data. Okay, banking and financial sounds scary, but I think everyone in the industry understands that your financial health has a direct impact on your physical wellness. Okay, I know a lot of clients don't understand that, but there is a lot of research that indicates if you are financially unhealthy, okay, that leads to stress. Stress leads to health complications. Also, if you're financially unhealthy, if you are living with a comorbidity, or you do get sick or injured, you have fewer resources to properly take care of yourself. Okay, and that leads to higher mortality risk and further complications in the future. So data sharing or being transparent, clients can get up to 6% cashback monthly just for sharing data. Okay, so 1.5% for your medical scheme data, 1.5% for your wearable data, 1.5% for credit score, 1.5% for financial and banking data. This does not mean that you need to share all your data. Okay, so clients who are very sensitive or private to their financial and banking data don't need to share that if they don't want to. It just means that they won't get the cashback for that portion of the reward. Okay, so they can engage and be as transparent or kind of opaque, I guess the opposite of transparent, as they want to be. The next thing that we look at, okay, so sorry, this is just to show you what the client portal looks like, where your clients will share their data. I'll do a little live demo later on in the presentation and show you how you would interact with these things. Okay, but it's all digital. It's all done through the privacy of a client portal that has multi-factor authentication. You sync your data once and you don't need to sync it again. Okay, so that will pull through seamlessly. So once it's set up, it's set up. You don't need to fiddle around and go back and upload stuff. It's quite a seamless, intuitive system. Okay, the next component of the rewards is engagement. Okay, so we've touched on transparency, that's sharing data. The second aspect is engagement. What does engagement mean? Okay, so engagement will make up 24% of the 30% of the reward. So it makes up the bulk of the monthly cashback that clients can qualify for. Obviously, because this is what's going to actually drive the reduction in claims for Elevate. Okay, and clients will get up to 6% cashback per area. So 6% for activity, 6% for healthcare, 6% for credit score, and 6% for financials. That makes up 24%. 24 plus 6% equals 30%. Okay, and some examples of the monthly goals: completing a targeted number of physical activities per month, okay, and or a certain number of average steps per day. Improving or maintaining your credit score. So if your client has a healthy credit score, that's great. All they need to do is maintain that, and they'll get the 6%. I mean, that is really easy for most clients to achieve. Clients who have a poor credit score, all Elevate are asking them to do is improve their score by 1 point per month. Okay, which is positive behavior. That's progress. On the healthcare side, taking responsible management of any existing health conditions. Okay, so if you're living with a chronic illness, going to collect your medication when your script runs out, right? I mean, that's just the basic thing you should be doing to not die if you have a chronic illness. So I hope everyone who has chronic illnesses are doing those things. Going for preventative screenings. Okay, so if you're over a certain age, going to have a mammogram done, going to have your prostate checked, those types of things which aren't fun, but you should be doing. For financials, reducing your level of indebtedness. Okay, so the financials, just to touch on that, they use a third party called Yodlee, Yodlee, I think is how it's spelt. You can go Google them. They're a huge data aggregator and reporting system. Started in the States, been around, I think, since 1995. So very reputable. And I've kind of come across Yodlee a few times during my time in the industry. So they are trusted. You log into your banking app, or you log into whatever financial account you have. It might be your retirement annuity with Sanlam or your Allan Gray investment account, and it will sync that data in one place. So it'll look at how much of your credit have you utilized? How much do you have in savings? What is your overall net asset value? What is your spending behavior like? What is your savings behavior like? And from there, it will create a financial wellness profile for you. Okay, so if you're over indebted, it's going to nudge or encourage you to take steps to reduce your debt, which is good financial advice. It's going to encourage you to budget and save each month. Okay, it's not going to force you to do it, but it's going to ask you to create a budget. Okay, and you shouldn't be spending more than 90% of your net income based on that budget. Okay, it's not going to hold you to account if you go over it, but it's more encouraging the right behavior and awareness. Okay, and then one third component, which I must say I'm always a bit sheepish bringing this up because it's incredibly irrelevant at this stage, considering COVID was, more than 5 years ago, but they will give an additional 5% cash back each month for clients that are vaccinated. This is falling away, I'm promised, around by the end of August, and being replaced with something else that will comprise that 5% cash back. Up until that's communicated with us and the market, the vaccination discount will still apply. Okay, so you provide your vaccination certificate and you'll get 5% cash back for the first 5 years of the plan. After 5 years, that 5% will be replaced with something else. Okay. But it will actually be a total of 35%, but the rewards component, 30% for being transparent and engaged. Okay, so your client will get access to a client portal, as I've mentioned. This is either available through their PC. Okay, so they'll go to elevate.co.za, they'll log in, and from there they'll be able to play around. They can view policy information, they can change banking details, beneficiaries, they can initiate claims on their policies. So there's a whole bunch of self-service functionality, but very importantly, this is also where they're going to interact with their rewards program. They can also log in on their phone. Okay, so there's no app on the App Store, but it's more what they call a web app. So you go to your browser, you log in through the website, and it will render like this. So it looks like an app, but it's web-based. Okay, so there they'll share their data. This view just shows you the goals. Okay, so just to give you an example of what these goals are in this little screenshot, it's quite small. So claim your Symbicort and Avam's chronic medication. Flu season is around the corner. Go and get your vaccine. Do one better than last month and complete 5 high intensity physical activities. Stay active and do at least 5,000 steps 9 times this month. Okay, and keep up the good work and do an average of at least 150 active minutes a week. So in this little snapshot, that's what the goals were. I'll show you what my goals are on my Elevate rewards. Okay, and then importance, how do you access the rewards? Okay, so the rewards are accessed via the client portal as well. Okay, so let me just touch on this in a bit more detail. How will clients' premiums be affected because of the rewards? Okay, so clients will always pay the contractual premium on their policy. So what was quoted, that is what will be debited from their account on a monthly basis. Right? I think this is very important because the Elevate Rewards is a monthly cycle, what you don't want to have happen is, 1 month your rewards is very, very good. You're getting a high cash back. The next month it's lower. So you go from 35% to 15%. If that were to happen and the premiums were fluctuating, it would look like a large increase in your premium, a 20% jump. Okay, and that's going to raise alarm bells. The client's going to come to you. There's going to be issues. Okay, so what Elevate said is, in terms of just kind of creating consistency and reducing the number of queries, we'll always debit the contractual premium. Okay, this is also good for a number of other reasons. It doesn't negatively affect commission, but the rewards will be a rebate that is allocated to the client's wallet in their portal on the 15th of every month. Okay, so let's play out a theoretical scenario. Your premium is 1,000 Rand a month. Okay, you pay your 1,000 Rand premium on the 1st of July. Over the course of July, you qualify for a 17% cashback. Okay, so from the 1st of July to the end of July, they'll monitor your engagement and your activity and the goals that you've achieved. On the 15th of the following month, which would be the 15th of August, that 17% or 170 Rand will be allocated to your wallet. And at that point in time, it can be redeemed. So you log into your portal, you redeem the 170 Rand, and it will be paid into your premium paying bank account within 48 hours. Okay, so the 15th is also quite an important day for policyholders because that's when the rewards will vest and appear in their wallet. Okay. And that's what the wallet looks like. Okay, so there's a little piggy bank. In this particular example, there's 8,231 Rand in the wallet, and the client can log in at any stage and redeem it. Okay, importantly, this money does not accrue interest. So we would encourage clients to withdraw this on a relatively regular basis, okay, because they're not going to benefit on any kind of interest or growth on that money. Also quite an important stat to note, the average cashback across all Elevate policyholders is just over 17%. So I believe it's 17.4% across all Elevate policyholders, which is about 2 premiums per year that clients are getting essentially for free, okay, because they're getting the rewards that can fund those premiums. So that's a meaningful kind of amount of value that clients are getting from the system, even if we look at it across all Elevate policyholders, which I think is great. And this little image just shows you the cycle. So it's a monthly cycle. Clients will check their portal at the beginning of the month, see what goals have been set for them, obviously kind of make a mental note of what they need to do. They can check the portal throughout the month to see what goals have been achieved, what goals haven't. At the end of the month, they'll know what cashback they qualify for. And by the 15th of the following month, that cash will be in their wallet and available for them to redeem. I just want to quickly jump into a live example of this now, though. Okay, so this is what the client portal looks like. And it's colorful, it's funky, it's interactive and intuitive. So from here, clients can do a number of things. I'm just going to quickly show you so they can take out a new policy or add cover to their policy. Note that if you are the original advisor to this client and they take out additional cover on the portal themselves, that commission will be payable to you. Okay, you're the introducing advisor, and if clients, increase their premiums or take out additional cover, that's linked to you as the advisor. The My Data tab is this screen, so I'll go through some of this next. Goals, this is where people can check their goals, see what they've achieved. The rewards tab is where they can access their wallet and redeem their cash. Policy management, this is where clients can change beneficiaries, update banking details, initiate claims, and then their resource center. Okay, so there's a whole bunch of nice calculators here. And this is also where their policy schedule and policy documents will be housed. So there's a lot they can do through this portal themselves. And I think clients are wanting this type of functionality more and more. It also means hopefully you as advisors, because there's kind of more power in the hands of the policyholder, you'll get fewer queries and requests on your end, which helps you, the efficiency of your practice. Okay, so I just want to show you my rewards. So my wearables, there's a couple of things not pulling through correctly here, which I've queried, but we can see in the last 7 days, I've run 28 kilometers. So I've been for 4 runs. My healthcare, so I'm with Discovery Medical Scheme, and I'll show you the questionnaires that I complete for the healthcare component. My credit score is 703 out of 740. And some of my financials are linked over here, and I can see my current net worth, my assets, and my liabilities. Okay, so I just want to expand on the wearables a bit. How would clients sync this data and interact with the wearables? Okay, so you'll click on Add Device. The client will put in their ID number, and they've got a number of apps that they can sync. Okay, so 15 health-based apps to choose from. Whatever they are using to track their activity, whether it's Garmin or Strava or Google Fit or Apple Health, they can log into their account. They log in once, and that data will be pulled through. It's definitely daily, but I think it could be updated almost on an hourly basis. Okay, so that's done once, one and done. Healthcare, Elevates are seamlessly integrated with 2 medical aid schemes. Okay, so when Matan started the business in 2020, the grand vision was to have integrations with all of these companies. And obviously that's proven to be more difficult than he initially thought, especially with the likes of Discovery, who I'm a member of. But what they've done to get around that is they've created 6 online health questionnaires that can be completed or need to be completed twice a year. Okay, so every 6 months, clients will need to complete these questionnaires again. And I'm going to go through one of them with you and show you how easy it is. Okay, so it's just asking me to complete some general questions, and I'm going to be honest with these. I think I'm a relatively active person, and I'm relatively healthy, but I still enjoy drinking wine. I still enjoy eating a steak at least once a week. I eat sweets, but I still read the back of the nutritional information on the stuff that I buy. So I try, but I'm often quite naughty, and I'll answer some of these questions truthfully, and we'll see what I score. Okay, I think Elevate are quite reasonable in terms of their expectations. Okay, so how is your overall health at this time? I think my overall health is very good. I'm not sick. I don't have any pre-existing conditions. I'm not overweight. How is your current overall mental or emotional health? I think it's also very good. I'm not going to get too deep on my mental health, but I'm generally kind of a happy, stable person. What aspects of your health would you currently most like to improve? Okay, I would like to improve my eating. And that's the honest truth. What, if anything, at this time stops you from becoming healthier? I'm going to say none of the above. And that's just because I'm lazy. Okay, but let's complete the nutrition questionnaire. So you'll see there's a questionnaire on nutrition, there's a questionnaire on sleep, there's one on healthy body, healthy mind, and exercise. Okay, so let's get started. And I mean, these are really quick. So I feel I know how to eat healthy. I would agree. I'm not going to say I'm a dietary expert, but I think I know. I have access to healthy food. I fully agree. I do. I consistently eat healthy. I would say neither agree nor disagree. I'm pretty inconsistent with regards to my eating. I would like to improve my eating habits. I fully agree. Okay, please specify if you follow or try to follow a specific eating plan listed here. Okay. I would say, sure. Can't select more than one. Okay. Let's say kind of calorie restriction and low carbohydrate. And then please think about your recent day-to-day eating habits during a typical 7-day week. How many fast food meals did you eat? 0. I don't eat fast food. How many servings of fruit and veg did you have per day? So I'd say 1 to 2 probably. How often did you add salt to your food? I eat a lot of salt. Okay, 7, I would say probably 6 or more times. I add salt to all my meals. How many times a day did you add sugar to your food? Okay, I don't eat sugar. I don't add it to my food at least. How many cups of sweetened carbonated soft drink did you drink per day? I don't really drink that. Do you read the printed labels? Most of the time I do. In the last week, did you eat more than one portion of red and processed meat each day? No, but probably no. In the last week, on average, did you drink 6 or more cups or glasses of fluid? Yes. In the last week, did you eat at least one portion of oily fish? Yes. In the last week, when eating bread, rice, or pasta and a choice was possible, did you pick high fiber? Yes. I always eat low GI bread, at least. Pasta, no. Okay. So that's how easy it is to submit one of the questionnaires. You need to do 5 every 6 months to get the full reward back. And you can see, I think I was honest. I mean, I definitely wasn't a model student. I scored 86 out of 100. People like me apparently score 65. Once I've completed all of these, it will determine what my percentage cashback is based on those answers. Okay, if you want to kind of be a bit dishonest and make yourself out to be very healthy, you can do that. But that's just to give you an idea, if you're honest, what you can expect to score on something like nutrition. Okay, and again, it needs to be completed for sleep, healthy body, healthy mind, and exercise twice a year. Okay, in terms of the data, I'm just going to go into my wearables, and I want to show you what you can expect typically for someone in terms of their goals. Okay, so I'm a relatively active person. I try to exercise at least 5 times a week. I've recently started running a reasonable amount, and these goals are personalized. Okay, so it's going to look at my physical activity history, and it's going to peg me at a certain level. So it's going to be like, Jono is an active person. He's not a professional athlete, but he's active. What does he need to do this month to move the needle slightly, to become a little bit fitter, a little bit healthier? So my goals would probably be a little bit higher than the average person. If you're a professional, they're going to be high, but they will reach a ceiling above which they will not increase. Okay, so Andre on this call is probably the fittest, most active person, and he'll probably have all of the hard goals, but I don't think they're unattainable even at the highest level. And Andre can correct me or not on that statement. Okay, but my goals are do 13 vigorous activities this month. Okay, so a vigorous activity would be 80% of your maximum heart rate for a period of at least 20 minutes. Average 4,000 steps per day. Okay, I think that's very doable, even for someone who's not active. and complete a weekly average of 146 minutes of moderate activity. Okay, I think moderate activity is 60 or 70% of your maximum heart rate for a period of 20 minutes. Okay, so that's kind of below my average activity. Okay, and then if I achieve these goals this month, next month, they'll be different. It might be a different combination. It might be do 5,000 steps per day or 4,500. Do 200 or 160 minutes of moderate activity, but whatever it might be. If I don't achieve these goals, so let's say I'm a complete sleuth this month and I don't exercise, or maybe my smartwatch breaks, and I can't achieve these goals. Next month, they'll be slightly dampened to make it a little bit easier to get me back into the fold again. It will also look at the age of the client. Okay, so if they're a 70-year-old, obviously it's going to use wearable goals that would match the healthy lifestyle of a 70-year-old. If it's someone who's living with a cardiovascular condition, it's not going to tell me to do 300 minutes of vigorous activity per month, right? It's going to say, maybe focus on walking more, or do moderate activities rather than vigorous activities. So it's very personalized. For credit, okay, my credit score is healthy, so I immediately get the 7.5% cash back for that. Cool. Okay, my financial goals, budget goal incoming soon. Okay, so I need to go back and refresh my bank, just because I haven't logged on to that in a while. So I think that needs to be refreshed on a monthly basis to update the spending habits. And then once that's updated, I must set a budget. Okay, and once my budget is set, then I would have got the 7.5% back. My healthcare goals. Okay, so I have not submitted my COVID-19 vaccination certificate. Okay, but I've completed at least one health risk assessment questionnaire. Okay, so that's an example of the kind of goals that you can expect to receive. I think these three are the easiest. I think the wearable goals are probably the most rigorous, if I can say that. But even saying that, I think they're quite realistic and attainable. Okay, and then in terms of the rewards, so I'm currently on 14% of the possible 35% cashback. I currently don't have any money in my wallet, but I can click the redeem button, enter how much I want to redeem, and it will pay out to my premium paying bank account. Okay, so that's just to give you guys a quick demo of what the client portal would look like. I'm just going to jump back to the presentation now. So I just want to end off by explaining how I think Elevate Rewards differs to other rewards programs out there, what makes them unique, what makes them more customer-centric. And then I'm just going to finish off with I always love finishing off with a bit of a case study. So I'll be finishing off with a bit of a case study on how I think Elevate Rewards can be really effectively positioned with clients. Okay, so I think probably the most important thing with the rewards is the philosophical concept behind it. Okay, so the 70-30 principle I spoke about. It's based on an aligned incentive. Okay, it's not based on kawaii smoothies and gym discounts, which are expensive and require a lot of people to lose out to fund it. It's purely Elevate saying, hey, you're a client of ours. We want you to be healthy so that we don't have to pay a claim for you in the foreseeable future. Okay, hopefully you don't want a claim to be paid. Hopefully you don't want to die or become disabled or ill. You want to be healthy and live long. So we are going to incentivize you to do the right stuff to achieve that. What does that mean for you? It means you can get up to 35% of your premium back in cash. What does it mean for Elevate? It means Elevate are going to pay fewer claims, and they're going to have a longer mean average term on their policies. Okay, so their policies, because clients are getting so much value back, they're not going to lapse or replace them. Okay, and that is a symbiotic relationship where the client is winning, not just because they're healthier and probably happier, but they're getting more money back and Elevate are more profitable. And I think this is really important because it will mean less shifting of the goalposts. Okay, so we've seen Vitality shift the goalposts. We've seen Multiply shift the goalposts. And that is because their models are not profitable, or, you know, they need to kind of make it more difficult to fund the system. Whereas Elevate's rewards program, it's based on actuarial pricing models, which have existed for, you know, decades, if not centuries. And it's based on medical data and research. So the goalposts will only be shifted or changed if one of those things change. If there's new medical, you know, research that comes to light, and there's maybe something that's more effective than steps to measure your physical, like, wellness or activity, for example. And Elevate wants all customers to achieve the maximum rewards. Okay, if all the clients got to 35%, they wouldn't need to make it more difficult, because it means that they would have an incredibly healthy risk pool. The next point, so it's built in as standard. You don't pay anything for it. I'm using Vitality as an example a lot, and I apologize. It's my only, one of my few reference points. So I'm not slating Vitality, but I know Vitality has got very expensive. I think it's close to 500 Rand a month for Vitality, which is a lot to pay in an incredibly price sensitive market. Okay, so the rewards here, you don't pay anything for it. The reward, or the cashback, it's a monthly incentive. Okay, so it's provided the month after the goals are achieved. It's not a distant goal or payout. And I'll use my parents as an example here. So my parents are heavily integrated with Discovery. They're lifetime Diamond members, so they're doing everything right. But their cashback, I can't remember what Discovery calls it, is payable in, I think, 7 or 8 years. And that's forming part of their retirement plan. Okay, it's a big number. I think it's like a couple of million Rand, but they're paying over 20,000 Rand a month for their Discovery policies. And they can't afford that, A, they don't need it, B, but there's this irrational behavior that they're exhibiting because they're chasing a distant cashback. And I think, you know, as financial planning professionals, that's concerning, but for a family member, it's, you know, as a child, it's very concerning. You know, so I think that those types of incentives are problematic for those reasons. And Elevate's, I think it's very healthy that it's not structured that way. Okay, and I haven't mentioned this once during the presentation. I wanted to leave it to the end because I think it's incredibly impactful. This incentive scheme or rewards program can only ever benefit clients. Okay, so you're never penalized for doing the wrong things. Okay, if you're eating hamburgers and you're not doing any activity, even if you're the most unhealthy person in the world, you'll still get 6% cash back just for sharing your data. Okay, you'll never be penalized. If you choose not to engage, that's also fine. You're just going to pay the premium that you signed up for. And I think that is really treating clients fairly. So that's a very important part, especially for us as Icon who distribute this product. Okay, there's no invasive medical testing or fitness evaluations required. Okay, so you don't need to go to your GP. You don't need to go and have blood tests done to show what your cholesterol is, or have your blood pressure taken. You don't need to go for a fitness test. None of that. Okay, so I think for people who are busy and living, frantic lifestyles, doing those things is often a burden and a chore, and you don't need to do that with Elevate. Which leads me to the next point. This is handled seamlessly through the client portal. Okay, so it's convenient. Generally, you do it once and you don't need to do it again. The only thing that you should be doing is logging in regularly to check your goals and redeem your cash. And I think that's important for advisors. You don't need to be hosting wellness days, having, like I see, treadmills and stuff in people's offices doing these things. You don't need to worry about that. So I think it kind of takes that strain away from you as an advisor. So those are the 6 key differentiators we believe Elevate offer that is completely different to any other rewards program out there. And look, there may be 1 or 2 similarities across other rewards programs, but I honestly believe that this is one of, if not the most customer-centric rewards programs available. Okay, so I'm going to show you a case study. And this case study came about through conversations we've been having with advisors who are either very concerned about premium escalations. Okay, so premium escalations are a real concern. Even a 10 or 12% premium escalation, which I think is considered relatively, what's the word? Not aggressive. It's considered like quite conservative in our industry. A 10 or 12% premium escalation or inflation on things is quite high, right? It's kind of 2 times CPI, and clients often can't afford that 10, 20 years down the line. The other conversation that's been coming up a lot is this concept of pre-funding a policy, kind of later on in life. So you pre-fund it, and at the age of 65 or whatever it is, your policy premiums stop and your cover remains in place. And I think Elevate Rewards can be used as a meaningful mechanism to achieve those things. So create premium sustainability throughout a client's policy lifetime. I'm going to show you how. Okay, so in this particular case study, a client needs 15 million Rand. Okay, so I've just used a biggish number. It was quite a young, I think I quoted on myself, so I'm relatively young. The premium came to 1,400 Rand for 15 million life. And I've just assumed no cover escalation and a premium escalation of 10%. Okay, so what you could do here, you could structure it. You could have a 5% cover escalation and a 10% premium escalation, however you want it to, but just focus on the annual premium escalation. I think that's the important thing here. And we can see in the premium projections, this premium is escalating at 10% per annum. Okay, so it's a nice fixed, predictable increase every year. So what can we do to make this policy premium more sustainable over the term? Okay, so like I said, a 10% escalation, it starts to hurt later on in life when your premium gets quite high and your income isn't maybe growing as much as it was when you were a bit younger. But you can leverage the 6% cashback just for sharing data. So forget about achieving the goals. Okay, let's say you don't want to, you're not a goal guy, you don't want to worry about the rewards. You just want to share your data and be done with it. And get the 5% cash back each month for being vaccinated. That adds up to 11% cash back before achieving a single goal. So that's your worst case scenario. So in this instance, in year 1, your premium is 1,410 Rand. Your cash back of 11% is 155 Rand. your cumulative saving over the year is 1,861 Rand. Okay, on your policy anniversary, your premium is going to increase by 10%. That is a difference of 141 Rand. The cumulative difference over the year is 1,692 Rand. So your saving in year one funds your increase in year two. In year two, the same thing happens. Your cumulative saving is 2,047 Rand. Your increase in year three is 1,861 Rand. Okay, so your savings through the rewards can indirectly fund your premium increases in perpetuity. So you're benefiting from the cheaper upfront premium of the 10% annual escalation. Okay, we could have done a level premium, but then your starting premium might have been double that, you know, closer to 3,000 Rand. We didn't. We said we'll take this 10% escalation, but we'll use the Elevate rewards to indirectly fund the future increases. And I think this is a really smart way of positioning it with your clients. It's important to engage and get that value back. Okay. And you can save all of those rewards allocations until year two, and you can use it to help fund your premium in that year. Okay, you can also use it to just buy overseas holiday tickets or flights or buy Christmas presents. That's entirely up to you. But I just thought that this was a really cool, clever way of positioning the rewards and actually utilizing those savings to improving your financial wellness over your lifetime. That's it from me in terms of Elevate rewards. I hope even the people who have worked with Elevate for a long time learned something new, or got a fresh new insight into Elevate rewards. But yeah, I think if there's any questions, I would be happy to take those now.
So there isn't anything in the chat box, but if anyone else would like to maybe put their hand up or shout out, any questions?
Mumtaz, yes.
Hi, Jonathan. Just one question. With regards to, at the beginning of the slides, you went through the different like preventative measures that if a client has for example, a mammogram, right? So do we need to get the client to upload results or anything of that sort for you guys to note the scores?
No, so those goals would only be set if you are on one of the partner medical aid schemes. So that's a good question. There's two partner medical aid schemes, Best Med and MedShield. If they have noted either one of those schemes as their medical aid when they go through the underwriting process and when they set up their client portal, only in those instances would it look at things like that. And those types of checkups are noted on your medical aid. Okay, so they'll be able to automatically establish and determine that you've gone for that screening through your medical aid scheme data. If they are not on one of those two medical aid schemes, then as was the case for me, I'm with Discovery, then they would just complete those online health questionnaires twice a year, every 6 months.
So if a client is with, just to understand, if a client is with Momentum or Bonitas, you guys wouldn't be able to pick up the client's health history or whether they are going for any preventative tests.
Yeah,
but be able to put that.
But in that case, that wouldn't be set as a goal for them. It would only be set as a goal if Elevate can automatically determine that they've gone for it.
Okay.
So in the case of Bonitas or Momentum, they would just have to complete those questionnaires. That would be the only goal that would be set for them. But after 6 months, that goal would pop up again and would say you need to now complete a new set of questionnaires.
Okay. Thank you.
Cool.
Cool.
Yeah. So,
Just like
I don't think we have any other questions. I just wanted to add, thank you, Jonathan. That was fantastic. And the practical part of it, I think, was really, really useful for the guys. And I will be sending through the recording to everyone who attended, along with some marketing collateral that you can use with your clients.
Cool. Thanks so much, everyone. Appreciate your time. And yeah, if you have any questions or you need any further information, chat to myself or your Icon solution specialist.
Thank
Cheers,
you,
everyone. Thank
Bye-bye.
you.
And sorry. Thank you, Jono. Thank you so much.
Cool. Cheers, Clarice.